Good morning, everybody. It's so fun to... Everybody here? Are we good? Test. I guess I should have tested this before it was time to talk. All right, if you guys could all get settled. We gave everybody a couple extra minutes because I know it's a bit of a maze to make their way back here. So, and we'll get going. You guys are going to have to get friendly. This room only fit a certain amount of people, so can't be shy. That keeps cutting out. Is it something I'm doing? I know. Technology's lovely.
Check 1, 2.
Okay, Brad's going to switch me out here. Oh, it did it again. Yeah, I'll just stop. I don't think I should be allowed to touch that. Okay, good morning, everybody. I'm Sherry Johnson. I'm the Executive Director of the Idaho Manufacturing Alliance. I have met many of you, not all of you, so hopefully I'll get to meet those of you I haven't met yet. Thanks for coming this morning. I know everybody's pretty excited that we get to do this kind of stuff back in person full force again. So we're glad to host it, and we're glad that you're here because it'd be pretty boring if it was just us. So for those of you that have been to our meetings before, we do have some people viewing online as well, so welcome to them as well. But we go through some housekeeping items for the first part of the meeting, and then we're going to give you a break where you can top off your coffee and maybe even use the restrooms, which are just out this door right here. And then we'll come back for the main presentation because nobody wants to hear me talk all morning long. And we're going to hear from Jerry Sturgill, and that's going to be on preparing for a business transition. Heads up, I know in the event information, we had two different speakers that were supposed to speak today, and both of them had some really unfortunate circumstances this week. And so Jerry is pinch hitting, and I'm sure he's going to do a great job, but that's why our speaker is different than what you saw online. We weren't trying to do a bait and switch, I promise. But the topic remains the same, and Jerry's got a lot of great experience, so I think we're going to get some great info. Really quick too, and they may not be around, but I just want to give or acknowledge our two staff here this morning that you met at the check-in table. Tiffany Engler's our Member Services Director, and David Page is our Administrative Specialist. They're probably hiding back here and heard their name and won't come in, but can't do what we do here without them. We're kind of like the dream team. So appreciate them and what they do for IMA. Want to appreciate our new sponsors. We've had a handful of new sponsors, and this is, we usually go from meeting to meeting, so it's about quarterly that these updates happen. So thanks to BBSI for their sponsorship, CMIT Solutions, the Chandro Group, and Chase Bank. And we have 28 new members since our last membership meeting in August. Many of you remember we had our trade show in December, so we kind of used that as our membership meeting. We didn't do a membership meeting that quarter because of the trade show. So 28 new members since then, and as of yesterday, we're at 170 member companies. So we continue to grow at over 20% per year. Pretty excited about that. And so, oh, thank you. Well, I can't take a lot of credit. I think you guys take a lot of credit for that because you all talk about the IMA and what benefits you get out of it. So we appreciate you guys spreading the word because you're reaching a lot of people. So it's a team effort. You can find our active members on our website at any time. So our website is chock full of information you should be looking into regularly, I think. All of our events are updated on there regularly too. So if you missed some of this and you want to see it, go to our website. One of the things I really want to highlight, because we're super excited about it, is our economic impact report that we put out in December. Super thankful to the University of Idaho Economics Department and Alturas for sponsoring that project so we could get it out to people. Lucas from Alturas is here somewhere. Lucas, where are you? Oh. Maybe he's not. Maybe he popped out. That's embarrassing. I just totally called him out. Oh my goodness. Anyway, this report, we do have copies of it here if you're interested in having it. We do have digital copies we can send to you as well. But some of the really cool statistics that I hope, especially the manufacturers, are really proud of is when applying the multiplier effect, Idaho manufacturing accounts for 20% of our economy here, and that we employ 170,000 people and produce $16.2 billion in gross state product. So good job, manufacturers. That's exciting. So the report has a lot of other information. We're excited to improve that report every time we do it. So we're looking to do some regional statistics and some regional stories, spotlight stories too. So be looking for that coming out. We'll, of course, make a splash about it, but really excited about it and so thankful for our partners because we could have never done that without their expertise and financial support. So. Wanted to remind members, we have the ability for you to give us newsletter submissions. So if you have something exciting that's happened in your business, or there's some sort of business-related or manufacturing-related event that you think would be interesting for our membership or the industry as a whole, you can email newsletter@idmfg.org, and as room permits and content permits, we will include those. We're always looking for relevant information to add to that. And then also job postings. This is a member benefit we have. You don't have to be a manufacturer to post a job on that if you're a member. You can be anybody and post a job. There's a really easy tab, jobs, and then there's a sub-menu item that says submit a job opening, and you can submit that, and then we can approve it on the back end, and it goes live. So we intervals will do boosted posts on social media for our jobs page so that it reaches more people. We don't always do it, but we do a few times a year. We'll boost that just to drive traffic to it. So I know in this market it's really tough, so the more places you can post those jobs, the better. I'm not saying you're going to get 1 million people from us, but I do know people look at it. So every little bit helps. And also, member benefits and discounts. That's another thing you can find on our website. Everything that's updated and that's offered currently is on our website. You can find details there. Each of these tabs will take you to more information, and you can always contact us to learn more. A lot of our partners, sponsors, and other organizations give us great benefits and discounts to take advantage of. So don't forget to look here because there's some things here that'll save you headache, time, and money. So make sure you're checking on this often. And those are growing every year, and I give kudos to Tiffany for that because that's been her baby for the last few years. She's really grown that to an impressive list. And then wanted to remind you we have a member portal. A lot of members don't know that. I know we send a lot of emails when you join, and that's one of the pieces of information that's in those welcome emails. But it's really easy to set up an account. If you go to the member login and you haven't set up an account, there's a create an account link, and it'll recognize your business URL and know that you're a member and let you create this account. Every once in a while, it's a little twitchy and we have to help you, but for the most part, you should be able to do this on your own. And you can see what you've registered for and what events are coming up. You can find information, contact information on other member people who have authorized their information to be shown in the member portal. You can contact people strictly out of here, and you can see what lists and committees you can assign yourself to. Or lists, really, we don't have committees that you can assign yourself to. But there's some helpful things in there. We also always post, here's just the events, yes. We also post all the resumes that we email out to members. We post those on the member portal too, so if you ever go, I think they sent something, you can go find it on the member portal. So it is a good resource for you as members. Okay. Upcoming events, we have a lot of really great stuff going on. We've got our Intro to Lean course with Tech Help. Greg's here somewhere. Where are you, Greg? There you are, Greg. Greg and Dave O'Connell, I think you're helping on that, Greg. I think we're on wait list right now, but somebody may back out. And if you're interested in that, we'd just love to know because we can plan another one. Those classes have filled up every time, and so we're going to keep doing them on a regular schedule to take care of everybody. And then on April 4th, Tenant Realty Advisors is going to do a happy hour and information session for us on the state of the industrial and commercial real estate market in this crazy season we're in. So that'll be really interesting for those of you that have maybe some plans to move or just kind of want to know what that commercial industrial landscape looks like. So April 6th, we've got an OSHA 10 general industry course that we're doing. There is still space in that one if anybody's interested in sending some of their team. And then this is a really big event for us, the April 14th Supply Chain Conference up in Post Falls. We're partnering with the Pacific Northwest Defense Coalition on that one, and I think Dale is here somewhere. So we're excited about what that's going to look like, and we hope to do those in all different regions throughout the state. So more than likely we'll be doing one down here too. But if you're trying to get business in other parts of the state, that might be an interesting event to attend. And then on May 4th, we're doing a site tour and networking event at Air Filter Superstore. Really interesting business. They supply a lot of our manufacturers with their industrial filtration, and they also do custom filters, but they've done some really cool process improvements in their business to where they've grown like 3 times, but they've used the same amount of staff because of the process developments they've done and some of the just-in-time and lean stuff they've done. So that should be a really cool tour, and they're going to do a networking event for us as well. So free food and drink usually gets people to go and be interested. So again, a little bit more about our supply chain conference. That's a really big opportunity, I think, for folks to meet other companies. We're right now, the confirmed speaker is Idaho National Lab. We have a number of asks out that we're hoping to hear back on really soon. That event will be in Post Falls at the Jack. It's their Arts and Cultural Center. So if you're interested in that, we have information on the website. You can talk to Tiffany or I this morning, or contact us in the office next week. Okay, another really exciting thing that we're kicking off soon, I hope. I feel like I've said this a few times, but that manufacturer's database I've kind of shared with you all a couple times. It's finally open and live to the public. So those of you that are manufacturers, you need to get on this site and fill your profile out. I know when we were doing the private beta testing, we had a few of our board member companies fill out their profiles and kind of worked out a few kinks. We're going to continue to improve that database. That was done with a grant from the Idaho National Lab and again in conjunction with the University of Idaho. So we're really excited about that project and what it means for the state. Instead of people emailing us and saying, I need to find someone who can do plastic injection molding, we're going to be able to go to this site and type it in and find them all over the state. So it has a really cool, this is just beta mock-up. We're working on real graphic design and design on this site now, but when you click on it on our website, this is what the homepage will look like. There's a map search, a simple search. You can add your company. So we're really excited about this. Utilize it. There's a link to it on our website, so go visit. The more people who utilize that, the better tool it's going to be. So we'll be pushing this out to the economic development groups, and Commerce is going to help us push it out once we get our marketing pieces together, and we're hoping it'll be a really well-utilized tool. So we cannot do what we do without these people, because your membership dues pay for like 1.5 of us. These people do most of the rest. So I just want to acknowledge them again, how important it is that you guys support what we do, both in your membership dollars and in your sponsorship dollars. Yeah, I'm very thankful for everybody's participation and allowing us to keep growing and doing things to support the industry. So thanks to all of these sponsors, many of which have been with us for a really long time. So thank you for your trust by investing your dollars in IMA. Yes, Lynn. Uh-oh. Do we have it wrong? Probably, well, I downloaded this from our events page, but the website's probably correct. Tiffany will check and we'll get back to that. Yeah, thank you, Lynn, for pointing that out. It's the 5th? Okay. So sorry, that was my fault. Okay. So if ever you need to contact any of us, it's pretty easy because you can reach us on the website. You can also call us at any time. Many of us are part-time, so we're not always in the office, but we do get back to you as quickly as possible. But there's our contact information. I ran through that a lot faster than I normally do on the housekeeping stuff. Anybody have any questions about any of those events or any of the things we have going on? I'm happy to answer them, because if you have a question, invariably somebody else does too. Anybody? Okay. Yeah. Good question. So again, we haven't done that event before, but Tiffany went and joined PNDC for their last event last month to kind of see how that runs. And it will be 3 to 5 tier 1 type suppliers who are going to talk about their supply chain, how you can qualify to be part of their supply chain, what kind of suppliers they're looking for, what you need to do to reach them, all those details. And I should have Tiffany talk about it because she was there and she heard it all. And then you're sitting at round tables, and it's almost like a supply chain speed dating, a company speed dating. So after the presentations, you're at a table with 8 people, 6 to 8 people, and you do a quick intro of all the companies and what you do. And then another speaker will get up, a supply chain manager or something, and we'll talk about their company and their products and what they're looking for from suppliers. And then you switch tables and do another round of that speed dating. So you're going to basically meet all, the idea is that you're going to try to meet all the attendees in that room. So our estimates are we're going to have between 75 and 100 people at that event. So you'll meet, members of different businesses, and they won't all be post-fall. Some are coming from Seattle. So our hope is it's going to be a really good mixture of people, and it'll be an opportunity to reach folks that we haven't really reached before or talked to before. So PNDC has been doing those. Dale, how many years have you guys been doing those? Oh, yes. Why did I say that? All these P acronyms and the aerospace defense acronyms, I know, confusing me. Oh, no. Yeah, I wanted to say somebody told us like over 10 years, but maybe I'm wrong because I got your acronym wrong, so it's been a rough week. And I got the date right. Thank you. Thank you. Sean, you're not welcome here anymore. Don't point that out. Oh, my goodness. I'm going to go home and take a nap. Okay. So on that, if nobody else, does anybody else have any questions? I know. I don't want to stand up here anymore. I'm feeling like arrows are shooting at me. Yeah, I know. Don't do that. I'm quitting if you do that. Oh. All right. Any further questions? Okay, great. I'm going to give everybody the quick 5 minutes, and our quick 5 minutes usually turns into 10. But for the sake of those that are on the stream, let's try to make it 5 minutes. Refill your coffee, your water, get some of those Danishes, use the restroom, and then we're going to get back and listen to Jerry Sturgill talk about preparing for business transition. So I feel like we should have like a timer slide that shows a countdown. Oh, do you have one? Oh. All right. Thanks, everybody. Okay, I didn't even check myself. That was probably more than 5 minutes. Are you laughing at me, Carmen? Me? No. All right, everybody. I'm glad I don't take myself too seriously up here because we'd be in trouble. All right. So as I alluded to earlier, we had 2 different speakers that you guys saw that were signed up to or decided to bless us with their knowledge, and both of them had some unfortunate events that happened. And so Jerry Sturgill is a business partner of Bill at Galena Capital. Hopefully I presented that relationship in an appropriate way. Okay. And Jerry's just as good, I think we're going to say, right? He's just as good. We'll see. Yeah. Jerry has a wealth of background. So for those of you in manufacturing, he actually has a manufacturing background. For those of you in investment banking, he actually has a background in investment banking. I finally know what that means too, by the way. I just learned that like 2 weeks ago. So I don't do a good job of presenting our presenters, and I want them to present themselves and give you the honest truth instead of me making up from their little paper. So without further ado, I want to introduce Jerry Sturgill with Galena Capital.
Thank you. Thank you, Sherry. I am delighted to be here. I've been looking forward to this at least since yesterday. And I don't know if Sherry told you, but my partner Bill was on a ski trip with his significant other, and she fell and broke her upper humerus just below the head. And so she was in surgery last night. She was supposed to be in surgery the day before, but a bad snowmobile accident came in and trumped surgeries, and so she went in last night. But he would be here. Thankfully, our associate Arnav Vermani is with me here on the front row. You'll see a picture of him shortly. But I want to take about half of my allotted time just to describe the presentation that I've been assigned. I know there are a lot of other things that we could be talking about in today's world, with today's news. We're seeing supply chain problems, inflation, all sorts of problems that we're all confronting together, including $4 plus gas at the pump. But I'm going to spend half the time just presenting the presentation, and then I'd like to leave as much time as possible for us to have some discussion. Call it Q&A. Or we could go do laser tag. So I'm going to start just by giving a quick overview. First of all, I got to define what investment banking is. It took a while to explain it to Sherry. Where's Sherry? The fact is that I'm an investment banker. People look at me with a blank stare when I say that, especially when I say we don't do investments or banking. And so they wonder, what the heck is that? So I'm going to explain that. I'd like you to know who we are, just so you know that we're here and we're eager to be part of the association and be involved and help. Because we're here in Idaho because we want to be. I'm an Idaho native. I will then talk about the main part of the presentation, which is how can we maximize value in anticipation of a transition event in a business, which is the assigned topic. And then we'll leave some time for Q&A. So just a little bit about me first. I came into this world, like most people I know, as a miniature human, and grew up in Twin Falls, Idaho. I'm a fifth-generation Idahoan, graduated from Twin Falls High School. That's my high school picture, just so you can see the before and the after. And then I was a guide on the Middle Fork of the Salmon River during my summers, going to college. I earned my way through school, guiding on the Middle Fork. And then I went elsewhere. Mike keeps cutting out too. Brad, thank you for keeps turning me on. But the experiences I've had have been pretty far-flung. I started as an attorney, I confess. I was a corporate attorney, got hooked into the corporate practice working on an IPO in Boston, Massachusetts, for a company that was putting up the first atomic clocks that were going in the GPS satellite system. And that was kind of exciting, manufacturing, technology. And then after spending time on Wall Street, really wanted to come back home and bring our kids out here to be closer to grandparents and to raise our children in Boise. And so I continue to be a complete nut for the outdoors. That's part of the attraction to come back. And I also have been deeply involved in community service. My wife and I both have been deeply involved in community service in Boise. This is a town, this is a community, this is a valley where service is something you can do, unlike when we were in Manhattan, where you can really see your footprints. So I'm going to introduce you to investment banking. What is investment banking? An investment banker should be a business partner. And I like this definition that was on the Investopedia website. And really what we do is we aid the sale of securities, that is ownership interest in a business. We help facilitate the raising of capital through the issuance of securities. And we help facilitate mergers and acquisitions. And there's a lot of words on this page, but that's mainly it. That's what we do. You hear about investment bankers generally in the bigger markets who are involved in raising capital for public companies. We don't do that. We help companies raise capital through private placements of debt and equity securities. We happen to be registered with the SEC and with FINRA and have to go through a process of keeping that registration because to offer ownership in a business is the offer of a security. And for the 1 or 2 lawyers that are in the room, you know exactly what that means. The offer of ownership in a business is the offer of a security. And so registered investment banking is an important part of how we do it, why we do it. Why do we do it in Idaho? Well, these are things you already know. We do it in Idaho because Idaho, unlike when I was growing up in Twin Falls down in the Magic Valley, Idaho has exploded. And our economy has grown. And our state gross product has grown, and it continues to grow. And the trends are that we will continue to experience economic growth here in Idaho. We are among the top states in the country for business, for all the reasons that you already know about. Patent creation is way up on the list. Business creation rate is at the top in the country, according to the U.S. News and World Report. So investment bankers, in summary, involve themselves connecting capital to businesses. It's as simple as that. We connect capital to businesses both to facilitate growth and to fund transition events. A transition event may be, for example, sale of the whole company or part of the company. So we'll talk a little bit about that, but the main focus for today is to tell you about us and what companies can do to prepare for transition events. I'm going to try to stick to the script. So this is our team. You can see I've lost my hair. And that's my partner, Bill. Juan Carlos is sitting up here. We have some other additions. Our partner, Jeff Anthony, is up in Coeur d'Alene, and Skyroot recently joined us. He's a prominent advisor and now banker in the ag community. So we're professionals who want to live and work in Idaho. We're focused on service, on helping companies and exceeding expectations, and we bring a lot of experience from different places to here, to focus here on companies here. So we have 4 pillars to our work. We start by helping companies with strategic advice. We help them source capital, like I said, for growth. We facilitate transactions to buy and sell businesses, and we help manage distress and turnarounds. And so in my experience, I've even had some of that experience. Probably many of you have, to deal with economic business distress, whether it's industry-driven or it's specific to a company. There are always challenges in the cycles as they come and go. We may be feeling a little bit of it today, especially with costs going up. So our main focuses are manufacturing, of course. That's not just for you, but we have manufacturing experience. Like Sherry said, I have been the owner and the chairman of a company that was a consolidation of a number of food manufacturing companies in the West. I was the CRO of a distribution and warehousing company that we turned around and sold. And I've been on various boards, including working with companies in the Treasure Valley that are involved in machining, heavy metal kinds of work, precision manufacturing. We have a pretty large base of experience with respect to manufacturing. We're also very keen on on ag tech, and food processing. We currently have a nanotechnology deal in the market to help facilitate higher yields with less costs for the farmer. We also have a claim on technology. If Bill was here, the technology one may have come up first. He's our technology guy. He was a banker and was an investment banker with Piper Jaffray covering the Silicon Valley. And then we have other sort of technology-related experiences. And we also have experience with natural resources, and then I have had a lot of experience with energy and clean tech. So we claim that our focus is in the Western US, but we tend to be connected all over the world. And what we've highlighted here in the dark blue are places where we have actually done business or we're currently doing business. Like, for example, Arnav and I were up late last night waiting for a proposal to come in from a big company over in India. So we're short on sleep. So let's talk about the main topic. Let me get to the main topic, and I'll try to be attentive to the time here. I'd like to finish this in 15 minutes or less. So put on the timer. This is pretty self-evident. This is sort of the normal kind of three-stage progression of businesses, generally, the usual progression. And you can see in this curve that companies start in the venture stage. We call it the venture stage, usually raising money from friends and family, putting expenses on credit cards and that sort of thing. Some of you may have experienced that. And then as the company develops revenue, it enters into a new phase and becomes capable of raising other forms of capital. Even revenue-based financing is available, but also is able to present itself with a projection, a strategy, a business plan that convinces investors to now come in and bring more capital. So where we get involved generally is at that stage. As an investment bank, that's when investment bankers can really add value in helping a company get ready to raise capital by presenting itself with its financial projections, et cetera, to a market of investors. And we help create that market. The other place where we get involved, of course, is at the time of a transition event. The transition event, as I said before, may be an exit by the owner of the business. It may be selling part of the business. It may be selling all the business. Maybe an asset sale, maybe a stock sale. And so there are a lot of things that, in our experience, we deal with as we consider these two phases of business life where investment bankers can add value. So this is just a very rough set of concepts about how to get ready for transition events. And it starts with really understanding where you are now, where a business is now. What is the business worth today? And what can we do to make it better? Implementing a strategy. How can we properly capitalize it? How can we then start preparing for the event that we have planned? And sometimes it's an event that's planned because the business owner wants to retire and is looking forward to doing that within a certain period of time. And so you've got to start planning for that and start thinking, what can I do to maximize value? And so preparing for the transition and then beginning the deal process and then actually closing the deal, so to speak, and executing on the transition plan. Those are just general steps. Well, today we're just going to focus on two of those. One is, what can we do now by way of strategy? And then the second one is, what can we do between now and the time of the planned transition event to be fully ready, fully prepared, and maximize value? The whole point is maximizing value. That doesn't always just mean dollars and cents. That could mean, who is going to take over my business and continue to maintain my legacy? Who's going to be the new boss for my employees? Who's going to basically create opportunity for them? And if you really are, if you're really interested in helping economic development in Idaho, how is this going to help my community? How am I going to help promote economic activity here that will continue and grow, even with new ownership, whether it's minority ownership or majority ownership? So the first place to stop is valuation analysis. Now, this is just an illustration of kind of the exercise that we go through when we value a company. And we look at different data, different sources of data that help us to kind of figure out what ranges of value might be for a particular business model. This happens to be a particular business, manufacturing business, but it's based on metrics that may include looking at revenue growth, cash flow, EBITDA is what we call it, and very often multiples of EBITDA or revenue become sort of guidelines for valuation, but there are other sources for this information. One is, just like you'd be looking for comparable house sales if you're selling your house, what is this kind of company selling for in the market today? Now, it's easier, of course, if it's a public company because you have market valuation available real time for publicly traded companies. It's not so easy for private companies. And so we subscribe to a bunch of expensive databases that tell us about activity in the markets for this particular kind of business. We also have contacts in our investor networks who help us figure out what the trading multiples are for companies of this particular character, this kind of business model. And then we look for companies that are like our subject company, that may be publicly traded. And we look at the financial metrics of companies that we hope are as close to what the private company is that we may be working with. So we can figure out what's the public market have to say about this. We'll often discount those values because there's discounts for illiquidity, small business, et cetera, and the risks associated with smaller businesses. We also have databases that give us actual multiples based on NAICS codes. So we'll use that as a reference. And then we'll often build a financial model, and I'll mention this later, but usually in the process of getting ready, no, I won't mention this later. That's a different episode. The fact is that in preparation, as early as possible, and this is supportive of the business plan, the strategic plan, et cetera, it's building a financial model that helps owners and management understand what it's going to take to achieve the values that are hoped for in the future. And so knowing what that may look like and taking into account all the variables that may affect a business, pricing, labor costs, the whole set of issues related to tax. I've talked to some tax people here today. What are the contingent liabilities? What are the contingent risks associated with a business? Is there environmental issues? Are there litigation? But these all are things that go into value and that are taken, to some extent, estimated, taken into account in building a financial model to try to figure out what the cash flows of the business are or can be going forward on a projected basis. And then I know some of you know this cold, but discounting those cash flows back to present value. And that's how we do discounted cash flow analysis. And then we put it on kind of a football field. Sorry, I don't have the BSU colors here, but the fact is we put it on a football field kind of format to show what the ranges are. And then you see that green big bar that sort of defines what the likely ranges are within the various factors that we take into account. So that's just a really quick snapshot of what is otherwise a pretty complicated science of valuation. So what are the things that affect value? And this is sort of the meat and potatoes of the presentation today. The things that affect value are numerous, and I don't know if I've captured them all in this presentation. But I remember once, before I became a CEO myself, I called a friend of mine who is the CEO of a pretty significant company. It was owned by a larger public company. And he'd been very successful as a CEO, and I knew that. And I called him up and I said, Randy, what's the secret of being a successful CEO? And he said, Jerry, it's all about the people. Click. And that's about all he said. And so I soon learned it's all about the people. You know, having an experienced management team and a founder who really is devoted to the business, working hard, experienced, connected in the industry. How well does the company do in retaining employees? And what are all the complicated, we could spend a whole hour talking about just that. What kind of systems does the company have? The most important systems, I would tell you from our experience looking at hundreds of companies, is the most important system to get right. Not just the management systems, but the accounting system. And being able to produce information that gives owners and managers real-time access to how the company's doing. And I've often said when I see companies that can't get their numbers, they can't get their months closed except for a month or two later, or their numbers don't add up, so to speak, or there's a lot of inconsistency in the numbers in the presentation. And I'm not going to make any remarks about different accounting systems, but the fact is that if management can't see, even in focus reports, even on a daily, weekly, and certainly a monthly basis, with numbers that are credible within a reasonable space of time, and I'm not a pilot, but it just sounds like flying blind. It's like flying without instruments. And so, and by the way, when it comes to presenting a company that's ready to work towards a transition event, the most important thing is to get the accounting right, get the numbers right. And it's not just a matter of quality, it's a matter of timeliness. And it's also conveying to the outside world, these investors that we go out to and offer securities to, it's conveying to them that the systems are in place and will be going forward that will allow, as real time as possible, access to data so that owners and managers know what the heck is going on as soon as possible. Now, there's other features to all of that, but it's about the people first. Everything else kind of follows, but I'll just tick off. Oh, and by the way, I forgot this. Brad, can you turn me on? The absence of succession planning it's so common, I hate to tell you. But the fact is that is an absolute drag on value, on perceived value. And the reason for that is that as outsiders come in and they look at who is running this company, what happens if one of those key people doesn't show up on a day? Goes down in that airplane that doesn't have any instruments. Or, what if the owner wants to retire, but he hasn't really groomed a successor? This is a big founder problem, by the way, with small to medium-sized businesses. So all of that's about people. So here are some other things really quick. We talked about accounting, having systems that permit annual budgeting, having a long-term strategic plan, being in a large, understood, addressable market, kind of knowing your market, knowing your industry, going to the trade shows, getting to know who's out there in the industry, who are your competitors, having consistent revenue growth. Then we get into the numbers part. Better than industry margins, efficient supply chain management, especially in the challenging times we're in. Accelerating cash flows by managing inventory. Minimizing inventory, turning inventory quickly, collecting receivables. Measures, some companies have commodity risk, and so they have to take real measures to buy forward or hedge risk. So having systems, strategies in place to deal with those issues. Recurring revenue is also a plus. Sometimes it's hard because most businesses are selling an open account. It's hard to get long-term supply contracts. But the fact is the more of that could be nailed down, the better the value is going to be. Having diversity in the customer base. Here's another problem. I've seen this problem. When we got into the food processing business, we had concentration with a customer that was already on the edge. Well, doggone it, that customer kept growing. And we loved shipping to that customer. But that customer, by the time we sold, was at 40% of our total customer base, total revenue. And that is perceived risk, right? So how do you explain that to somebody who's looking in from the outside? What happens if you lose this customer? You know, we're working with a company right now, one of their biggest customers, big box retailer, just decided that they're not going to take any more supply, especially because of all the supply chain problems coming out of China. And so they just lost that business. It was 30% of the total business. And those are issues. And anyone coming in looking at a company is going to ask, what is this customer on a contract? What are you doing to diversify your customer base? I would tell you this is one of the hardest problems to solve. You probably already know this. Like, what do you do if your customers keep getting bigger and bigger? You certainly don't want to shut them off. But at the same time, you've got to be able to think forward about how to diversify the customer base into different customer markets and whatever. But the fact is, that by itself is we'll do that in a follow-up episode. Accelerating cash flows. Having IP is a plus. And having that IP be adequately protected with patents and trademarks and know-how. And do you need to take that? Who's that? Was that you?
It was an alarm
Oh.
to remind me to listen better.
Oh. Were you falling asleep? Maybe I should pause and tell a joke. And then, of course, the absence of contingent liabilities. That's a big thing too. I mentioned it earlier. Litigation, environmental risk. That kind of tax issues. That's a big problem. Question in the back.
What do you mean by high velocity cash flows?
Well, thank you for asking that question. High velocity cash flows are ones where you are turning your AR in as quickly as you can. And you're turning your inventory as quickly as you can. Because when those things turn to cash, right, sooner, that's what I mean by increased velocity in cash flows. Does that answer the question? Okay. So what negatively affects value? I had to pick a river thing. So what negatively affects value? Well, it's just the mirror image of what we just talked about, right? It's management turnover, employee turnover, weak systems, no succession planning, key man risk, bad reporting, lack of budgeting. It's all these things, right? Customer concentration. I've already talked about this. Undisclosed environmental liabilities, right? Undisclosed back taxes owing, undisclosed regulatory investigations, litigation. Thank you. On that cheerful note, let's go forward. So what do you do? This is my last slide, by the way. So I'm going to try to dial this in, bring it in on the hour. I won't, but I'll try. What do you do? What can you do now? And what should you do, your owner, or you working with your owner, if you're in management, if you're helping, right? If you care about your company, what can we do to really help get ready? Planning for the transition event. I think this is what you meant, Sherry. What do you do to plan for the transition event? Well, things you can do now, just think about all those things we just talked about. And I can't capture all those things in these little boxes, but I can tell you this. There's some practices that, if implemented, will really make a difference. One is, have a strategic plan. Engage everybody in strategic planning. So everyone has ownership. Budgeting. Annual budget, yeah, we see a lot of companies that don't do annual budgeting. Really careful. This is not easy to do, and it takes time. But when you're really busy, it's hard to find time to do this stuff. But it's like flossing your teeth, right? You got to do it. Otherwise, you're going to lose teeth. Improve your systems, especially accounting. Did I say that earlier? And then focus on your metrics. If you get the accounting in order, then focus on what really makes the difference in this business. And make it as simple as possible so everyone can understand it. Is our margins that could be improved because we're going to change how we source this supply? Is it increasing revenue? Is it turns through the plant? Is it how quickly these parts are coming out? Is it productivity out on the floor? I mean, what is it that's going to really drive value? And so I don't know what all those metrics could be. They're going to be different for every business. But it's going to be something that if you focus on it and you make it simple so even your line people can understand it, it becomes the benchmark for everything else. And it becomes an opportunity to create a discipline in the company so that you have consistent performance. And I've seen a lot of companies, not just ESOPs, but a lot of companies who will give at least some financial data to even their line personnel so that they know that if they run that machine more effectively, that's going to create economic opportunity, not just for the company, but maybe an opportunity for a bigger bonus at year end. And so those are things that should start now. And then everything kind of carries forward. That's what these little arrows are meant to suggest. So about 3 years before. Now, why did I choose 3 years? Because in our experience as investment bankers working with companies that are looking forward to transition events, the last 3 years before that event are the ones that investors focus on. And if you ask an investor, or if the investor calls up and says, I'd like to see your financial information, it's usually, very rarely is it more than 3 years. But the point is that you want to be working these levers well before that. But in the last 3 years, that's when it really becomes important. So what does that suggest? That suggests that there's a plan and that there's a schedule associated with the plan. Now, that may not be true in every business. Sometimes the founder, owner may have no retirement plans. He may just, we have an owner that we're working with right now. I am pretty sure he's going to stay on the floor and run his business until they have to carry him out on a board. Or he's going to end up getting run through one of the machines. he'll be CNC'd. But maybe he'll be buried in a CNC machine. But the point is that 3 years before, you got to focus on revenue growth, focus on margin improvement, and focus on diversifying the customer base. I'm just picking 3 things, but those are the top 3 that came to me as Arnav was preparing this presentation. In the second year before, everything from the third year goes forward, of course, and then the second year, focus on working capital. Manage your working capital accounts. Now, why is that important? Does everybody know what I mean by working capital accounts? That's the stuff we were talking about earlier, AR, inventory, current assets, current liabilities. Managing that number matters. And the reason it matters is that in a transition event, especially in an M&A deal where company X is being sold to company Y, company Y is generally going to have in its purchase agreement a provision that says, we've been watching your numbers, and we see that consistently you need this much working capital in the company. And that number is going to be in the purchase agreement. And if, after we've finished our audit, the working capital number is up or down, then we'll adjust the purchase price. I mean, that's real life. That's the way it's done. It's done even with the biggest companies. Working capital is a big deal. So being sure that you have not only managed it, and you know what your working capital needs are. Now, it's going to go up and down, of course, depending on circumstances. But the fact is, keeping track of it and being able to speak about it and show the discipline associated with managing working capital is a big deal in a transition event, in a sale of a company. And then, of course, we talked about this earlier when I made this is the longer version of accelerating cash flow. Yes?
What if, for reason the company needs to find an investor sooner rather than later and don't have that 3 years timeframe to work on? What would you consider some of the more important things to focus on immediately?
Well, so that's a really good question because I'm not talking about just the sale of the company. I'm talking about bringing in new investment. If you're considering bringing in third-party equity, for example, from private equity or even some of the sophisticated family offices that are out there investing, right? Smart investors are going to want to know that you're focused on all these things. So when I say transition event, it's not just the sale, it's the notion that in your strategic plan for your company, you're going to go through a transition event by bringing in new equity, for example, or debt. I mean, dealt with a bank lately? I mean, raising debt is almost as hard as raising equity as the banks continue to grind down on us after the mortgage crisis. Does that answer your question a little bit?
Yeah.
Yeah, I mean, this is all stuff that we should be doing from the get-go. All I'm saying is that year 3 and year 2, you could collapse this all together and just say, these are things you should be doing all the time. All I'm saying is that in the 3rd year before, you really got to focus. If that's part of the schedule. And the schedule is going to be different for everybody. And it could be different for a capital raise versus a sale transaction or a transition transaction by ownership. Okay, so final year. And then it's laser tag. You know, it's everything else from before. But, you know, working down inventory, cleaning up the receivables.
Question
Yes, please.
on inventory.
Yeah.
We've moved to an environment that supported just in time, and now everybody's worried about just in case.
Yeah.
So how do you justify higher levels of inventory given the supply chain issues that you've been experiencing the last 2 years?
You mean, how do I justify less inventory?
Well, actually, how do you, but be able to survive going out?
Like I said, it's going to fluctuate depending on circumstances.
So are there business-related arguments that would justify higher inventories
Yes.
than what is
Yes.
than
Yeah. I can point to a company that's close by that went out and bought several $1 million of steel as the prices were going up. I mean, when I was in the food processing business, we went out and bought butter forward just because we knew that it was a volatile time for butter. So yeah, I mean, you gotta run the business. But all I'm saying is that to the extent that you can, focus on the inventory levels. If you can work them down, great. If you can't, it's understood. But at least know when you're talking to somebody from the outside and they say, well, why did your inventory go up that much? Well, were you reading the Wall Street Journal? You know, just be aware. It's more awareness and the ability to describe the discipline. It's more the discipline in how you manage your working capital than it may be the actual number. But just know, and what this is presuming is that this is part of the strategy to manage to a transition event where ex post facto, meaning after the closing, there may be an adjustment to purchase price based on your working capital levels. And so just managing that carefully, especially in that last year or leading up to the event, is going to be important. Now, what does that mean in real terms? What that means is that the buyer, or maybe even the investor, is going to say, we got to escrow X millions of dollars just to cover the potential working capital adjustment. So the more volatility you have in that leads to another discussion. You know what I mean by an escrow? So if someone's going to pay $100 million for the business, they're going to escrow maybe 10 or 20 until we get through the working capital adjustment. And sometimes the working capital adjustment doesn't happen for a while. And so that's just money tied up, right? That's not the only thing they escrow for, but the fact is that you just want to have as quick, clean a deal as you could possibly have. And that's going to depend upon the presentation you're able to make on all of these issues, which is, this is a clean business, we have systems, we manage our working capital. And we've kept our employees, and this is all about how you present and the basis and the credibility of the data upon which we make a presentation to the market. Now, I often say this, you know what I mean by curb appeal? I mean, I've been in so many manufacturing places where stuff is just lying all over the place. So what I want to do, and desks in the offices are piled with crap. Excuse my French. The fact is that you're going to have people coming in looking at the company, and you're going to give an impression. And it may be even what the outside of the business looks like. So this is serious. Last year, mow the lawn. And then start thinking about who needs to be on the team. I'll just give this shout out to the people who should be on a team to help business owners transition. Would it surprise you if I said number of investment bankers? Well, they should be on the team. But experienced deal counsel, having lawyers who know how to get a deal done and know what the market terms are and have done enough transactional work to know what a markup of a purchase agreement means relative to market terms. Next, accounting. Having experienced deal accounting or accountants. You've probably heard this before. Quality of earnings reports. Have you heard that? Does everybody know what that is? I mean, it is often being requested by buyers and investors in today's markets to bring in an accounting firm who's going to dig in. You think audits are easy? This is super audit, and it's to be able to express to the buyers with an opinion, like an audit opinion, that the earnings are solid. Quality of earnings report. And that is digging into the customers and their creditworthiness and blah, blah, blah. I mean, it's an extensive report. I read one that was like 120 pages thick. It's really interesting data. The most important and the most expensive part of it, KPMG across the top. If it had been Galena Capital, it would have been a lot less, but we're not accountants. So lawyers, accountants, and here's one for you business owners. What are you going to do with the money? Once you liberate wealth, where are you going to put it? Do you have a plan? Have you thought about the tax ramifications? And do you have a wealth manager who's going to help you sort out what the best structure is for the deal, make it as tax efficient as it can possibly be, and then help you put that money to work in places that fit your risk profile, of course, allocating your new earned wealth in ways that are going to support you into the future. So that's just a quick thumbnail. Now, tune in for future episodes. Another river thing. That is me. No, that's not me. There's just so many more things that we could talk about. How do you assemble that team? How do you schedule, plan the deal process? Because one of the big challenges for business owners, of course, is that they've got to be involved. So you got to work that into the schedule. You got to understand, or you got to have the team that's going to support that activity. What are the due diligence questions that are going to come up? Some of you kind of heard about when we were talking about valuation creators and valuation destroyers. That is all embedded in very extensive due diligence checklists. You heard me mention financial modeling. Spend a lot more time talking about that, or Arnav could. He does the financial modeling for us. Structuring, tax efficiency, how do you analyze an industry? Where do you go for the information that you need to really understand your industry, because whoever you're talking to about your company is probably going to have done that research, and you want to at least be a step or two ahead, especially if it's in your industry. Target lists, who are the right buyers, investors? And sometimes this is a big deal because, one, you don't want the world to know that you're going through this event. And so being very careful and qualifying the right people for you to talk to. And if they're going to come in and own a part of the company, are they going to be a good partner? And very often this is all about just finding the right people, getting them to come, and they need to present too to help understand what they're going to add to the business if they're going to be a partner. Preparation of marketing materials, that's what companies and their investment bankers and lawyers and accountants help do. Think of prospectuses, for example, for public offerings. Confidentiality issues, always something that's an entertaining topic by itself. Protecting intellectual property, management of a competitive bidding process, lawyers involved in knowing what the market terms and conditions are, and then the process of closing the deal, AKA the transition event. So, yes?
Is there value in a privately held company having consistent business approvals in the transition process?
You know, thank you for asking that question. I would tell you valuation is probably the lead issue all the time. So the easy answer is yes. I mean, some businesses do it anyway because of buy-sell agreements and that sort of stuff. But the fact is that that's not the kind of valuation you necessarily want. What you want is what I showed you, basically, is a full range of analysis that's going to show what the company's worth today. Because when it comes down to it, so remember when let's see if I can go back. Can I go back, Brad? Oh no, I have to go through all this? Can you take me back to that? This one. Remember this one? Know where you are today. And then as often as it makes sense, economically and time-wise, understand what's driving your value. And this is where I would join up that thing I said earlier about understanding the metrics. What are the business practices? What are the metrics that if you monitor them and you have other people, even your line personnel, keeping track of where you are day to day, that's going to drive value. But at the same time, you want to keep track of where you are, because once you get up into the phase where you're going to be raising capital or selling the business, you're going to want to be as educated as possible about the market value of the company, FMV, the fair market value. And the reason for that is because that basically becomes the medicine ball in any one of these kinds of transactions. Guy gets pushed back and forth. Well, what about this? Well, that you have to be able to explain. Doesn't make a difference. Or if it does, why it doesn't make as big a difference as the investor/buyer might think. But it's a negotiation, right? But being as smart about your valuation and what's driving your valuation is perhaps the most important thing. So thank you for that question.
So Gary, being a turnaround CRO, you literally captured what took me years to learn in one slide deck. So thank you for
Thank you.
an excellent presentation. My question to you, in your experience, and we'll talk about this, I know, at another point. Working with so many executives and managers, what prevents them from raising their hand and doing what they need to do? I know that's a deep question.
Yeah.
But is it ego? Is it fear? Is it what have you experienced?
That is a really good question. Sherry, could you bring down the lights and pull out the sofas? His question is, what prevents business owners and sometimes managers
Getting their stuff together.
from raising their hand and saying, I need help, admitting they need help. So you picked a couple of words there that resonate with me. One is ego. I mean, part of it's just leadership style, right? And some of that's a lot of that. Oh, wait, most of that is ego, right? Has anyone read the book Good to Great? Okay, so that's the wonderful leadership analogy that I take away from that book is the image of the mirror and the window, right? And the point is that leaders, real leaders, have the humility to understand it's not all about them. You know, it's giving credit to everybody who's engaged in this process. But that same humility will cause the leader to ask for help. Here's the other dynamic that you see. And fortunately, this doesn't happen in our politics. There are certain leaders who think only they are right. And they surround themselves with yes people. Have you seen that?
Just last week. The last 2 weeks.
So this happens, so I'm not the only one. But here's, there was a great article in a business magazine about how a management team can have a good fight. Now, what was that about? That kind of was a catchy title. How can a management team have a good fight? Well, the point is that a true leader doesn't want to just hear his own or her own opinion spouted back to them. They realize that other people's perspective, experience, and the world at large has something to teach them. And so I think a lot of it's ego. And I think having the humility to recognize that you're not always right and be willing to look for help. Arnav is probably going to jab me under the table here, but the fact is that you've got to be humble, or your leadership has to be humble enough to ask for help. That's the bottom line. And recognize that there are other points of view that could be really, really helpful. Yes?
When you talk about improving AR, what do you mean by that, and what are some ways that you improve it?
Well, some of it starts with just who's your customer, right? Is this a customer you want? Is this a customer that pays its bills on time? Is this a customer who itself is teetering? And so having real AR management, collections management, is critically important, right? Because when it comes to cash, a company can't survive without cash. And if the cash problems of another company are rolling up and affecting your company, this is where the CROs need to get involved. And a lot of it is just making sure that the company is collecting its cash. And that starts with understanding who your customer is and having a pretty good idea. I mean, you probably do credit checks on your customers, run credit profiles, credit applications. You know, knowing that your customer is financially sound, right? And that it has a track record of paying its bills. That's quality AR.
And how much do you value those customers who pay on shorter terms? Per se, maybe some of your largest or best customers pay on longer terms. How much value do you put on that?
Well, so every business is different, okay? So we've worked with a company where their terms are 120 days. Normal terms are what, 30, maybe 45 tops? But 120 days? I mean, it's crazy. That's a problem you got to solve. And what you end up having to do is you end up spending money, with, I don't know, I won't pick a bank's name, but think of a bank. You end up spending money for working capital lines. and drawing on them when you probably wouldn't need to if your customer would pay its bills. Next question. Yes?
To build on a previous question, would you mind speaking to the importance and significance of helping the business owner to transition from working in the business to working on the business?
Brian, you want to take that one? Yeah, so that is a great question. That is a wonderful question. Because what happens, unfortunately, and I'm sure it doesn't happen here, but what happens, unfortunately, is that sometimes, especially, have a hard time letting go. And what we tell business owners in this bubble right here, make yourself dispensable, right? But it's really hard. It's really hard for a business, especially a founder. I don't want to dump on founders here, but the fact is that I'm the founder of this business. I've got my life tied up in this thing. I have taken risk to get it this far, okay? And I would promise you it's hard for me as a business advisor to sit across the table from a founder CEO and say, you would achieve a lot more value if you brought in someone to replace you, or at least train them to replace you. Because what if you don't show up? You know, what's that going to do to your employees? If this business tilts over, goes into a slump because there's no consistency in management. And I'm not sure that answered your question. Would you answer that question again?
The question was to speak to the importance and significance of helping the business owner transition from working in the business to working on the business.
It is really important. And how you do it kind of goes back to that question of, is it a leader who's humble, a leader who's teachable, is a leader who's arrogant, or is he the only? I mean, we got a guy. He's got a. I hate to talk about people because you might know these people, but he has a business that knocks about 60 million in revenue and 30 to 40% EBITDA. Right? What is he doing? He's still out on the line. He's still out walking around the manufacturing floor. He's working in the business, not on the business. And so some of it really goes to the things we talked about, which are engage the team in a strategic plan that helps the owner see that more value is to be gained with either replacement leadership, succession leadership, somebody new, but the owner has got to be lifted out of that sort of myopia that lays that tunnel vision. That sometimes it's just how the business started, right? I was walking around this plant from day one, and I'm going to keep walking around this plant. Well, is he doing anything to help the long-term strategy of the business? Well, yes, but not as much as if he had delegated. That's the word, delegate. Learn to delegate. And then go to the boardroom and work on the business. And call up Galena Capital. No, call up people who can help. Call Brian. Call somebody who can come in and give some advice about how this business could be better managed, better run, how it could be more profitable. Right? It's hard, especially when a company's making profit like 30 to 40% EBITDA, to convince this guy, go to the boardroom. You know what I mean? So it's kind of circumstantial, but I'm not sure I still have answered that question. This is another one where we need to bring down the lights and bring in the sofas. Brian.
I would just add, the first thing I would recommend is 2 hours a week, you schedule it, calendar, reoccurring, to get off-site, sit down with a pad and paper, and start writing things out. That's the first thing I would tell a business owner to do, is to get out of the business to where you're putting out fires, shut your phone off, get away from the kids, go sit in a quiet space off-site and start to mind map everything there.
I love that idea.
Just
That's a
mind map.
great idea.
Free associate, journal, pray, cry, start to see a little bit of light at the end of the tunnel. But you have to get away from the business
Yeah.
and
Go on vacation.
just 2 hours a week on a calendar. Get out of your own way.
Here's another idea. Anyone has a good idea, please chime in, because this is collective intelligence. Yeah.
I think a big part of it, the way you're answering it, the thought that came to my head was counseling.
Yeah.
It's therapy. It starts with therapy.
But I think a big part that's missing is counseling the team that's directly under that person. Because I think there tends to be, regardless of the nature of the leadership, there tends to be panic from the subordinates with that. Oh my gosh, so-and-so's not here. And I think there has to be a lot of counseling or, use that term again, or instruction of that team outside of that leader that kind of like rubbing everyone's back, and it's okay. And that can be difficult because especially if you're not trying to necessarily expose that there's thoughts of transition in the company, that also creates panic and freak out.
That's a great thought.
But try to get the team to understand that as well.
Yeah, that's really good. Yes.
Having been through this transition in the last 12 months, I don't think there's a wrong way. It's going to be depending on what the founders are open to or not open to. But at the same time, if you think about as a founder, this is their baby.
Yeah.
So it's like raising a child. And how do you build the confidence that that child is going to be able to survive without you?
Mm-hmm.
And so, honestly, it's building that confidence in that founder that the company has learned enough and that the leadership within the company has learned enough and knows enough that they're going to continue to survive without them. And they will organically start to let go when they see that confidence, just like a parent of a teenager
Yeah.
does so.
Wow, that's really good. This is why my parents didn't go to college with me. Here's another idea. Has anyone done YPO or any of these peer leadership groups where you get together and you talk to your fellow CEOs and compare notes? I mean, getting out of the bubble is another thing. I like the idea of writing down, mind mapping, just spending some time thinking about from the top of the business and its future, right? And sometimes it just takes get off the damn floor. Sorry. Are we out of time, Sherry?
We are at our stop time. They're great questions. If people need to leave, they're welcome to leave. If there's more questions, I think we keep taking questions. So up to you, Jerry, and your time frame. It's
Please.
usually how we handle it.
Yeah, I'm willing to stay for a few minutes. Please don't leave.
Why don't we do the wrap up and then we can have some extra Q&A after?
Sure.
Maybe that we can.
Yeah.
That way, those that feel like they need to exit and definitely.
There was one question here, though, while we're in the flow. Yes, please. Or comment.
Whether it's investment bankers or commercial bankers, we all like confidence in the numbers, that the numbers are being produced correctly. But some of the confidence comes in knowing that the management team and owner knows what each number is translated to.
Yes.
And how those decisions are either adding value or taking value away.
Yes.
But what we found recently is there's so many companies right now looking for CFOs, controllers.
Right.
How would you suggest that, and then also with the transition, training your leadership team how this decision affected, inventory turn or
Right.
receivable days, whatever it is, right?
Yeah, yeah.
How would you, in your world, and you take a look at all the financials and having confidence in them, how would you advise a business owner who might have a CFO or a controller to learn more about that and to be able to explain it to you or myself?
Yeah. Whoa, that's a good question. We just need more accounting grads. We need more people who are willing to start, maybe just with bookkeeping and move up to CFO status. But being a CFO is not just keeping the numbers. It's creating the plans and the numbers that support the plans. And then reporting and managing the reporting in a way, like with flash reports and that sort of stuff, that really gives everybody in the company who needs to know real-time understanding of how the business is going. I think we have a personnel shortage, though, in this regard. I also think there's a failure on the part of some folks to believe that the person who's keeping the books is the CFO. That's not true. Absolutely not true. And when I did my turnaround gig, the first person I helped transition away was the person who had been keeping the books, and they were a mess. And I brought in a real CFO. I mean, but again, this is a longer discussion because there's a lot of definition around that term CFO. Yes, please.
I just have something to add to that. When I was like 20 years ago in college, I worked at the Small Business Development Center.
Yeah.
And they would counsel companies for free. And one of the first things they would do is take your financial statements, plug them into their spreadsheets, and get those ratios. And then they would pull the ratios from companies that are similar to yours and compare them, and give you an analysis of your performance, where you can improve. I would say that would be a great resource for some.
That's a great idea. You know, the other one that occurs to me.
It's free.
Yeah. Well, free is good. Has anyone had experience with any of these new sort of contract CFOs, the firms that seem to be growing up and away from the other bigger accounting firms? Yeah.
I was chief revenue officer for CFOs to go in Walnut Creek.
Okay.
And I was surrounded by, what I learned from CFOs to go.
Hey, thanks for coming.
Was a true CFO, like you said, is the business person of the organization.
Right.
The CEO is a visionary that overpromises and sends
Yeah.
people on goose chases and this and that. It's the CFO who is the voice of reason, who's the business person who has that strategic overview.
Yeah.
And says, no, you can't buy this. Yes, you can buy that. But I've worked for CFOs to go, and it was a great group. And you're talking about decades of knowledge.
Yep.
And that's
Well,
the nice thing is you can outsource that component, on a part-time basis.
Well, and just getting the job description right. You know, knowing what a CFO should look like and the qualifications they should have.
Right.
Like I said, it's not just pure debits and credits. Anyway, thank you so much. It's been great to be with you. Hope to be here again.
That really resonated with me on many different levels. Many of you know that I did own and operate a manufacturing company, and I can tell you that one of the reasons people don't ask for help is just ignorance, and I'm going to raise my hand there because that was me. And that is one of the things that we didn't do well enough, is really get a handle and understand the financials. So that all of this resonated, and I love how some of this even connects to how we're trying to operate IMA and just really be a successful business. We're actually going through the EOS system and trying to manage and plan. And I can't say enough, if you're not doing that as a business, you need to be doing strategic planning, and you need to get your financials cleaned up, and you need to understand them. And we're still working on that, but it's good stuff. Jerry, thank you so much for that. That was so concise for those of us that aren't as smart as you to actually understand what we need to do. So that was really good. I appreciate everybody coming. We are not kicked out of this room. If you want to stay, drink some more coffee, and do some more visiting, please feel free to do so. Thanks for being here. You can reach out to us anytime. One of the things we would love to hear from you is if you have ideas about topics for meetings. We love input from members on that. And those of you that are members, we're also going to be sending a member survey out soon. Please, 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 please take the time to answer that. That's how we know what you want to hear about, what things you want us to put in place for you. We don't want to guess. We want to know what you guys want. So thanks for coming, and enjoy the rest of your networking time.